Kevin Horner's with us, Senior Manager, Trading Services Education with Charles Schwab, to take a look at some names that are on his radar. We'll start with IDEXX Labs, IDXX on your radar here. It's been a winner for this year, up more than 20%. Tell us a little bit about this one and why you're charting this one, Kevin.
Well, as always, Nicole, this one provides an interesting opportunity on both sides of the market here. What I've found is a stock that's moved very, very well. So yes, it's off about 13% from its peak in mid-July here, late July, early August, but it's still, even at this spot, remains up 25% year to date. So it's had a really nice push, and I think it's undergone a nice digestion window here, about 3.5 to 4 months. The thing that stood out to me most recently, though, the last couple of weeks as we look at the chart here, there's been some excellent tests of this $600 ledge right below. Now, I'll admit, this is a pricey stock on a per share basis, so there are some concerns for some traders out there. Maybe this means smaller position sizes, which of course I would often encourage for traders in the first place. But the thing that stands out to me is the consistency of the retreats we've seen since mid-September to this same $600 range. And what it's allowed us to do is drag that very slow moving 200-day moving average in green down below, get that caught up to this price level. And so what we have is a nice solid floor at around 600 and coincident with the 200-day moving average. But we also have clear resistance of late. Those ovals on the screen representing times when we have popped above the 50-day moving average, but have not been able to maintain it. So I called this one out for a couple of reasons. One, that we've been in a bit of a consolidation and pull back to a major area of support. But two, the reminder that every trader has rules of thumb, rules they work with to help them decide whether they need to be in the position or out. And a lot of times it's something as simple as looking for a series of closes above that 50-day moving average. And in this instance, we've 3 times, and if you count today, I guess we could call it a fourth test and fail at the 50-day moving average because we ran right into it again today and sold off. We could say that this just needs a few days closing over the 50-day moving average to really tell traders, hey, we've broken this scenario, broken this so-called downtrend from July. Now, at this point, traders are kind of in the middle of it all. You know, price range wise, there's not a great setup either direction, but if it was to close below the 200-day moving average and $600, that would be significant and maybe opportunity for the bears. But of course, conversely, another test of that same 600 ledge and holding it could really inform the bulls and provide then an excellent entry with really tight support below it. So you could have a stop order below the 200-day. And excellent risk to reward opportunity. But, you know, it all kind of comes down to the fact that determining exactly how you like to approach your trades. Are you an all-in on all black and white investor, or do you like to be piecing into your positions and then adding as they move in your favor? Personally, I'm a little of the latter. I find that it helps me to manage my emotions a lot easier.
Yeah, well, looking at that dip in October and early October, that is well below the 50-day moving average, and that could make somebody a little bit. Yeah, that's enough. And it was down there not a day or two, but for some time as I was looking at that chart. I mean, you know, it wasn't a one-day move and then it was back to that 50-day. I mean, that's what I'm saying. When you're a trader, you have to be willing to bite the bullet sometimes. How about for solar? People love solar stocks overall. They love saving the planet, though over November, it hasn't done particularly well. Tell me a little bit about the First Solar chart.
Well, you're absolutely right about that. It might be hard to remember that First Solar is really a semiconductor company. And so it was actually participating in a fantastic move in the semis as we ran to new highs in the short run here early November. And in fact, when I pull up some studies looking at how it related to the semiconductor sector as well as the S&P 500, it was a leader versus both into that first week in November. Now, what have we done at this point? Honestly, it looks like a standard 5 to 6 week pullback, but we are at a precarious spot, aren't we? I mean, even today's lows are indicative of having to test that 6-week low level, which is right around 101 to 102. We do at that price have a series of 4 or 5 higher lows along the way since our bottom in May. So there's a strong 6-month uptrend in place here. And if you're a bullish trader who's looking at a group that's been performing very well, and that being the semiconductors, this is one that's not yet really run away from you. And so if we talk about stocks like NVIDIA and Lam Research and AMD, they all seem overdone to the upside, except this one happens to be sitting at a major area of support. And you can really see that there's opportunity for the bulls, perhaps, with that risk-reward ratio in their favor here if you think it can challenge the prior peaks. But of course, if it does not hold that 101 ledge, then it's got some momentum to the downside. And that green line down below that's nice and flat, that's the 200-day. That's still about 11, 12% below. And if it managed to slip from here, it could be a momentum-based sell that far down. That's certainly possible. But, trend traders are looking at what's gone on the last 6 months and probably feeling pretty optimistic about its opportunities to hold here. But make sure you're well positioned regardless which side of the fence you're on.
Yeah, 6 months does look good and looks more of an opportunity. But when you look at the move to, this past month and compare it to other semiconductors, it's like the unloved child. Forget about the fact that it's not even flat. It's down more than 10% for the month. While semiconductors, I looked at the stocks this morning and I had written it in my book. I mean, I don't have the very latest numbers, but at month to date through November 30th, the stocks was up 13%. And this is down 10%. I mean, it's truly the unloved child. I wonder if they don't view it fully as a semiconductor, or maybe it just has more room to run. It's like the last one, they forgot about it.
I think a little bit of both, to be honest. You're right about the strength in the semis, by the way. Noted this today in my Trader Talk segment on Schwab Live Daily, by the way, that this has been tremendous. The SOX has been fantastic. And even in the pullback that we got hit with in the last few days here, the SOX did not close below its 20-day moving average. So you've got a relative strength viewpoint in a group where we know the supply chain is improving and things are only likely to improve. Got my fingers crossed to that extent. But yeah, I agree with you. This could very well be the kind of thing that has an opportunity to play a little bit of catch up.
It's great to see you. Kevin Horner, thank you so much. There's a look at the stocks right now, and that's a better looking chart, but that's what it's all about. Charting, trading. Kevin Horner of Charles Schwab. Thank you very, very much.
Thanks,
nice
Nicole.
to see you. Thank you.